Hi, it's Michael Farr from Farr, Miller and Washington. Markets today made a new all-time high for the S&P 500. We closed at 1,920, brand new highs. The Dow Jones Industrial Average, about 35 points just below its all-time high. It closed today at 16,699. Stocks went up and bonds went up. When bond prices go up, the yields go down, so 2.46% on the 10-year. What got everything going? That's a really good question. We've said for a while that, as the Fed has threatened to taper, we were concerned that perhaps that selling and that lack of demand would lead to higher interest rates. The opposite has happened. We've seen markets stutter a bit when the Fed talked about the prospect of raising interest rates. And remember, last week I talked about that difference between when the Fed actually starts to predict and forecast, markets fall. When they actually start to take action, markets rise and start to rally. So right now, we don't have much earnings news. That's behind us. We're coming now into the third month of our quarter as we start June next week. GDP numbers came out for the first quarter today. They must have been good, right? Because stocks went up, bonds went up, markets making new highs. GDP declined for the first time in years and fell a full 1%. Economists all said, don't worry. Market seers and prognosticators said, don't worry. It doesn't mean anything. It was all based on weather. Bad weather kept people inside, kept people from spending their money, kept a lot of things from happening, slowed the economy because people stopped moving. Maybe. What we don't have is a robust economy, so we're coming back to this notion that I've been talking about for really a couple of years now. The economy's recovering. That's good news. The economy's recovering slowly. That's not horrible news. But there is no robust rebound economically. We have seen a reinflation of housing assets and stock and bond assets, which really accrue to that top 1% or top 5%. Middle swath of Americans and the general public don't have any more money in their pockets to spend or to purchase or to create demand. And we don't want them to re-borrow again, even though we've started to see credit card balances increase. 2% growth, don't get too excited, but the stock market now is becoming a little bit more expensive. Pay attention, don't swing for the fences, own really good names with really good balance sheets, and a little dividend never offends. If you need some help with your portfolio, give us a call at Farr, Miller and Washington. In Washington, D.C., I'm Michael Farr.